Good morning, everybody. My name is Micah Lamar. Really excited to be here with you. I've got the little chat box up here so I can see the questions and everything that people ask. And a couple things about the way that I love to present is I love having really interactive webinars. So along the way, if you have questions or anything like that, go ahead and post in the chat room, and I'll do my best to get them answered for you, okay? So my presentation today is called The Payday Cycle Method, How to Master the 4-Day Swing Trade in Only 15 Minutes a Day. And we're going to be hyper-focused on these, I guess it would be 4 to 8 day swing trades, okay? And if you're really, really busy like I am, you're going to appreciate the aspect of being able to compress your trading down to a very short period of time every day. So I'll be covering that for you today as well, okay? So quick disclaimer, Wall Street AO, we're not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. We're for educational purposes only. We're not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. So I wanted to take a minute and just kind of go over everything that you're going to get from being here today. We're going to start by talking a lot about entries and exits, because I think that if you could get the timing correct on your trades, everything else kind of falls into place. And I think when a lot of people ask me questions about, hey, should I buy, if you're trading options, should I buy it in the money or one strike out of the money? Like, how should I structure my option trades? And I think that that is important, but I think the most important thing is actually getting your timing correct. And so we're going to cover a lot of that today. And I'll give you my 3-step checklist as well. Every strategy that we cover today, we're going to be looking at strategy performance. So I don't think it's a good idea to ever trade something that you haven't backtested or validated. So when we look at strategies today, we're going to be looking at 1 year, 3 year, and up to 10 years of results for it. And that includes the batting averages, the win-loss ratio, and everything else that you're going to need to know about a strategy to make a decision whether it's a good strategy for you or not. We're going to be talking about the setup, so I'll be giving you my indicators and the settings for those and everything like that that helped turn these strategies into some of my favorite ones. We're also going to be talking about how to trade them, so how you can implement these strategies in a very short period of time every day. Again, I have a very, very booked schedule in my life right now, and so it's important for me to focus in and get my trading down to, 15 to 20 minutes at the end of the day. Okay, so real quickly, what is wallstreet.io? We are a community of stock traders and engineers. We started out in 2011 as Apple Trader. I was an Apple specialist, a derivatives trader, and I created a community called Apple Trader because I was trading at home. It was kind of lonely, right? So you're at your computer, So I wanted to create a community and a mastermind to kind of bounce ideas off of and everything like that. Within a few years, it was the largest community of Apple traders in the world. And in the process, I got to speak with some amazing traders and investors, people who had multi-million-dollar positions, and how they were hedging it and managing their positions. It was really great. In 2015, we changed the name to Wall Street AO and started building some really great stuff for our community, which we'll talk about here in a minute. So along the way of kind of growing our community, when new people would come in, we encountered a really big problem. And part of it was that we'd have new people come into our community and they'd say, hey, Micah, I heard that I should use the MACD with the stochastics. Or, hey, Micah, I heard that I should use the T-line or the 8 exponential moving average. Or, hey, Micah, I heard that I should use whatever moving average crossover that people are talking about on the internet. So bottom line, people were coming in saying, hey, I'm hearing all this stuff on the web and all these indicators. Do you know if they work? And I would say, well, I don't really know. Like I know that I have things that I use, but whatever indicator that you just told me about, I'm not really sure if they work for your stock or not. So then they would say, okay, well, who does actually know this? And I say, okay, well, let's go find out. So the problem was people would come into our community with all these ideas and things they heard on the web, and we had no way of really validating them or backtesting them, okay? So we went to the free charts that the broker gave us to see if they could backtest these things for us, like the MACD or the stochastics. And it turns out that the free charts that TD Ameritrade or any of the other big brokers give you don't actually have a way to quickly backtest the MACD, the stochastics, moving average, or moving average cross, or any of the other popular indicators that people like to use as traders. Okay, so even worse, if we wanted to do it, we had to do it by hand. Go ahead and let me know in the chat room, have you ever tried to backtest Have you ever tried to back test anything by hand? I got Kelvin Jasper. It says, like the cursor. Okay, cool. Hey, Kelvin, by the way, I love your name. My son's name is actually Kelvin. I've got twins. They're named Kelvin and Jules. Not a lot of Kelvins out there, so very, very cool. Craig says yes. Richard says yes. So it can take a long time to backtest it, okay? So the MACD alone has 28,000 possible combinations. So if you wanted to backtest it and then you wanted to optimize it, it would take you forever to do. So it would take you a lifetime. And we basically came to the conclusion, like, no wonder nobody knows whether these things work or not, because it takes a lifetime to try and backtest them. So we thought as a community, maybe if we kind of pull our community together, we could get some really great engineers to build us a backtesting program. Okay, so it took a really long time to do, but we finally did it. And in 2016, we finished our backtesting program. We named it Smart Studies, so that when you load an indicator, it actually tells you immediately how well the indicator's performed. Okay, so we're going to use that today to find some of the #1 swing trade strategies for Apple, because again, I mentioned I'm an Apple specialist, using a very, very simple 3-point checklist. Okay, so let me check in with the chat, make sure there's no questions. Let's see. Got it. Okay, cool. So here's the 3-point checklist. This is a very vague description. We're going to go into each one in detail in just a moment. But the first one is just to confirm short-term momentum. Second one is to confirm long-term direction. And the third, which is really important, is to look into the future with seasonality. And this is important because this is going to allow us to stay a few weeks to a month or maybe even more ahead of the market so that we can plan our trades way ahead of time. Okay. So let's go ahead and start with step 1, confirming short-term momentum. We're going to talk about how to master that 4-day swing trade using what I call a payday cycle. How many people here have heard of payday cycles? Go ahead and let me know in the chat room. So we're going to say 4 to 8 days here. Okay. So let's go ahead and just jump in right now and do that. I'm going to jump into the Wall Street AO platform. Hopefully everybody can see what I'm doing here. I've got Apple in front of me right now. I'm just going to go ahead and clear the MACD off for right now. But essentially, a payday cycle, what it is, it's a 4 to 8 day trend. And to view a payday cycle, I use a Heikin-Ashi chart. Have you ever heard of a Heikin-Ashi chart? Most of your brokers will have a Heikin-Ashi chart. So what I'm going to do right now is I'm going to flip back and forth between a candlestick and our Heikin-Ashi chart that we use for payday cycles. What I want you to do in the chat, as I'm kind of turning this back and forth, is let me know what the big difference is that you see between these two charts. Okay, here's Apple, right? This is a daily chart, and there's a candlestick, and there's your Heikin-Ashi that we use for payday cycles. Go ahead and let me know what you see that's the big difference for you. Marcelo, never heard of it. Okay, gotcha. Well, we're going to learn a lot about it today. Calvin says there's no gaps. That's correct. All right. And it smooths out the trend. That's correct. It makes it a lot easier to see the direction. So it sounds like we're all kind of on the same page. What I really like about this is it gives me a very, very clear directionality for short-term momentum, because the bars, the daily bars, are either green or they're red. And there's a certain way to read these. I'll kind of go into it a little bit today, but there's a certain way that you can read these candles. And essentially a payday cycle, what a payday cycle is, again, it's the 4 to 8 day trend of these candles. So there's your bullish payday cycle. And then here's your bearish one. There's a bearish payday cycle right there. There's a bearish payday cycle right there. So my job as a swing trader is to do my very best to catch these bullish payday cycles as long trades and the bearish ones as a short setup. Okay. But you can see it provides some really, really great opportunity for swing traders a few times a month if you're paying attention every single day to these candles. Okay. Graham, I got you here. Says it's clear. The bullish and bearish cycles are very clear. All right, I got you, Graham, and I completely agree. It's a lot more clear, right? So here's what's really cool. Like I mentioned, most brokers will give you a Heikin-Ashi chart that you can use. Nobody will backtest it for you. So I kind of want to start by just validating what I just showed you, right? So let me go ahead and clear this these little boxes. And so essentially, let's talk about a very, very simple strategy with these payday cycle bars. If you would have gotten into Apple on the first green one and gotten out on the first red one, how well do you think you would have done? So let's say every time a bullish payday cycle started and you got long at the close of the first green one, and as soon as you had your first red one, you were out. How well do you think you would have done with just trading Apple? Well, what we can do is we could use our validation and backtesting tool that we built for our community. Again, we named it Smart Studies. So what I'm going to do, I'm going to open Smart Studies. I'm going to click on date, and I'm just going to say, how well would we have done over the last 3 years? And I'm going to click payday cycle. Okay. All right. Let's just kind of hyper-focus right now. Let's just say the last year. Okay. So as soon as I post that in there with this payday cycle right here, what happens is, you may have seen this, we have these results over here now on the left. Okay. And essentially what the results do is they tell us all this really great information about the strategy that we're on. Okay, so right now we're looking at payday cycles, but if we wanted to look at the MACD or the stochastics or any of these other indicators that people like to use, we could also backtest them instantly. Right? Can everybody see this results box over here? I want to talk about this because this is going to be really important if you're going to use this payday cycle method. Okay, so right away you could see in the last year, if you would have bought and sold one share every time you had a green bar and then sold that one share every time you had a red bar, you would have made about $39. And while that may not sound like a lot in the last year, that's only with one share. So if you're trading 100 shares or 1,000 shares, you just kind of multiply that out. The batting average actually isn't that great. It's 13 wins, 14 losses in the last year. So the batting average isn't amazing. But what makes the strategy profitable is the average win is $4.39 and the average loss is $1.28. So you can see the reason the strategy works so well is the average win is multiples larger than the average loss. And even with a 50-50 batting average, you have an incredibly profitable strategy. And then what this shows you across the bottom is the profitability for the last 10 years. And then we also show you how long it generally lasts. Why is that important? Why is it important to know how long a strategy lasts? Well, one, it can help you set up your expectations for the strategy. And two, if you're trading options, it really helps choosing strike prices and expirations. Okay, so right off the get-go, just the results of this payday cycle strategy, again, just buying on the first green one, selling on the first red one, is a profitable strategy because the average win is multiples larger than the average loss. Does that make sense to everybody? Go ahead and let me know in the chat room if you have any follow-up questions. Kelvin says, I really like the Heikenhashi. Mark says, done really well. We're not testing the RSI Laguerre right now, but Marcelo says yes. Okay. Kelvin says very nice. So again, everybody's kind of up to speed. The basic idea of a payday cycle, again, is it gives you a visual framework for understanding short-term momentum. Because when short-term momentum is bullish, you're going to have a green bar. When it's not, you're going to have a red bar. It's pretty simple. Okay. And then what we can do on Wall Street AO for all 8,000 stocks and ETFs in our database, you can basically load up the payday cycle chart here and backtest it to say, hey, does this strategy even work for this stock? Because every stock is a little bit different. And so I really like these charts because I'm a very visual person and it helps me visually see against short-term momentum. Okay, so I'm going to go ahead and jump back and I've got a few things here to show you around payday cycles and how they work. I got 3 key metrics to trading payday cycles. So if you have a notebook or something to kind of write down some notes, this may be a good time to do that. So inside the 3 metrics, the first one is, and these are kind of queries too that you can kind of ask yourself and relate it to the chart. The first one is, has the stock hit a new daily high today? Higher than yesterday's high. So did today's candle, the daily candle, go higher than yesterday's candle? And if the answer to that is yes, then you could have a first bullish candle starting. Your payday cycle could be starting. Okay. Metric number 2 is, has the stock today made a higher low than yesterday? So is today's low higher than yesterday's low? When these 2 metrics are true, you have a bullish payday cycle. And every single day you can ask yourself these same 2 questions. And as long as these continue to be true, it's safer to stay long. As soon as these metrics go false, then it's riskier to be long. And then I've got a third metric here, which is a bonus, right? Has the stock closed at a new daily high today? right? So when you have a stock like Apple, and today's high is higher than yesterday's high, today's low is higher than yesterday's low, and it's closing at a new daily high higher than yesterday's close, you have positive momentum in the stock, and thus you'll have a bullish payday cycle. And so I ask myself these three questions every single day, right? And as long as they are true, it's a lot safer to me in the trade. And you could ride these out for a long time, sometimes up to 8 to 10 days for these really great cycles, and you can make a killing on them, right? So that's kind of the idea. Are there any questions about this so far? Let's see. Calvin asks about futures. A lot of people do use them for futures. We're not currently getting futures data, so I'm not able to backtest futures right now or forex, but we can backtest 8,000 stocks and ETFs that are in our database. Okay, so a couple things about these payday cycles. I'm going to kind of zoom out real quick. Along the way of trading payday cycles, we encountered a problem. The problem was occasionally we'd get false starts. What's a false start? Actually, we have a great example of it right now. A false start is when you get what looks to be a start, like this green bar here, but then it doesn't show any follow through. Like if you would have gotten long here on December 4th, you'd be hurting right now, especially with Apple, down trading at 167 and a half. It's moved down a few dollars already. Okay, so it's a false start, and that can be really painful for traders, right? Because you basically get in and it just immediately whips, right, the other way, and you're going to lose some cash. So along the way of trading payday cycles, we thought as a community that it'd be really important to have a secondary indicator to help us eliminate some of these false starts so that we can say, okay, well, here's a potential false start, or here's a potential entry. What's the probability that this is going to work out for us? And we can kind of identify that before we even take the trade by using a secondary indicator. Okay? Does that make sense for everybody? So we've got these payday cycles, but occasionally they have false starts, and we want a mechanism for eliminating as many of those false starts as we can. Okay, so you just learned really quickly about payday cycles, confirming short-term momentum, and what I'm going to do now is we're going to jump into step 2, confirming long-term direction, and what this is going to help us do is eliminate some of those pump fakes and false starts, and we're going to use a really simple indicator called the MACD. How many people here have used the MACD? Probably a lot of you. And now the MACD is a really great indicator. It doesn't work for all stocks, right? Because every stock trades differently, right? Apple trades differently than GE, than Ford, than the SPY, than the Qs. But luckily, we could backtest that to see how well does the MACD work with the stock and how well does it work at eliminating these false starts. Okay, so let's go ahead and jump right into that now. So what I'm going to do for us is I'm going to open up Smart Studies again, which is our backtesting engine. And I'm going to take off the payday cycle test, and I'm going to change the time frame to 3 years because I like 3 years, between 1 and 3 years. And all I need to do to backtest the MACD is literally just click on the MACD button, and it's going to load up the MACD with its default settings, 12.26.9. It's also going to load up the MACD down here at the bottom, which is what you're used to seeing, right? But at the same time, it's going to show me the results of the MACD. So before I ever make a trade with the MACD, I think it's important to know, does it even work or not, right? That's kind of an important question. So what we're looking at right now in a very simple format is over the last 3 years, if you would have used the MACD by itself, you would have made a pretty good amount of money, $69. Your batting average, 12 and 10, right? So again, the batting average is about 55, 60%. But what makes the MACD so effective with Apple, again, is the average win is $8 and the average loss is only $2.72. And then I'll zoom in one more time. When it works out, this lasts about 24 trading days, so about a month. And when it doesn't work out, you're out within about a week. Okay, so right off the get-go, you can see that the MACD strategy works for Apple. Again, not necessarily because of the batting average, but because the risk-reward ratio here and the average win to average loss is so skewed in your direction, is so skewed to your advantage. Okay, now let me show you for a minute how the MACD works, and I'll show you how it kind of relates to payday cycles. Okay, so the MACD is basically, think of it as two moving averages. You got a fast one, this black line, and you got a slow one, the red line. Okay, when the black line crosses above the red one here, you have bullish momentum that's starting. So I like the MACD because it's both a momentum and a directional indicator. And as soon as that MACD crosses to the bears, which it is now, right, you have a potential to sell or get out of your long trade. Okay, so this is a bearish MACD crossing. This is a bullish MACD crossing. And as these two lines separate from each other and accelerate away from each other to the upside, you have green rolling bars. And as the two lines are moving down and accelerating from each other, you have the red bars. And as they're moving up, if they start to pinch, you also have the red bars. And as soon as they cross is when it flips zero. So that's a little bit about how the MACD works. Okay. Now, as I mentioned earlier, it was like 8 to 10 years ago when I became an Apple specialist and was trading Apple derivatives almost exclusively, I came up with a theory. And I was trading payday cycles, and my theory was that bullish payday cycles, again, this may sound really obvious, but the theory was bullish payday cycles are a lot longer to the upside when the MACD is also bullish. And the second part of it was, my theory was, bullish payday cycles are shorter in length when the MACD is bearish, like it is now. Okay, so that's the way I had kind of been trading Apple, is using payday cycles in the MACD, and I had this whole theory around it that was working really great for me. And when we built Smart Studies, we're actually able to now backtest this theory to validate, to make sure, is this a valid theory? So here's what we came up with. Okay, again, we could backtest the MACD. We could backtest payday cycles. Now what I want to do is I want to kind of put them both together to merge them to see how does the MACD going from bullish to bearish impact my payday cycles. Okay, so let's go ahead and see. I'm going to, again, load up a payday cycle, and let's just look over the last year for now. Okay, so with these bullish payday cycles, by themselves, the average length on the wins are 9.2 days. Okay. Now, what I'm going to do is I'm going to load up the MACD now, okay, and I'm going to flip it to bearish, and I want you to see what happens there, okay? When the MACD goes bearish, the average length of the cycle goes from about 8 or 9 days down to about 4.5 days. Okay, so let's talk about that for a moment, okay? And I'll kind of show you what this whole thing is doing, right? So what this is saying is, what all these results and what the data is telling us is that when the MACD is bullish, like it was here in October, when the MACD is bullish, the average length of these bullish payday cycles is about 8 or 9 days. However, as soon as the MACD goes bearish, the average length of these cycles to the upside are only 3 or 4 days. So you're more likely to get a false start or a pump fake when the MACD is bearish. And so if you're to break your trading up into two camps, safer versus riskier, let's kind of poll everybody to make sure everybody's up to speed here. Is it safer or riskier to be in long calls when the MACD is bullish? Safer or riskier to be in long calls when the MACD is bullish? Go ahead and let me know in the chat room. Okay, let's see what everybody says. All right. Bum-ba-da-bum. All right, safer, safer, safer. Okay, great. Second question, safer or riskier to be in a bear call spread when the MACD is bearish? Safer or riskier? Right, okay, everybody's pretty much up to speed. Bum-ba-da-bum. There's a couple questions. Mark asks, is short just the opposite of the long? Yeah, but we like to optimize shorts individually. The best indicator in reverse is not always the best bearish one, okay? All right, cool. Let's see. Chuck says, what charting platform are you using? We're actually using the Wall Street AO charting platform that we built for our community. So while Wall Street AO is a community of traders, we also have a really great engineering team so that when I come up with ideas, and I do a lot, they can build them for me. And one of them was a backtesting engine, which is what we're looking at right now. So the charting package and platform you're looking at is the Wall Street AO's community charting platform. That is also basically a backtesting and validation platform. Okay, so it looks like everybody's pretty much up to speed, right? Let's see. Pam asks, how does the trend of the overall market affect the stats? Well, because we're independently testing Apple right now, the overall trend of the market has, the only effect really is that when the market is going crazy and ripping, especially the Qs. Apple naturally is going to be a little bit more bullish because Apple's a huge component of the Qs. It doesn't correlate as well with the SPY, but still does a little bit, right? But we're independently testing Apple right now. We could test any stock. So if you wanted to trade the SPY, we can certainly test how well payday cycles on the MACD or any indicator works. Any indicator that we can backtest works with the SPY. But good question, okay? So again, Smart Studies was able to validate my theory. And again, this theory was pretty simple. When your MACD is bullish, you're going to have nice long payday cycles to the upside. When the MACD is bearish, you're more likely to get a false start to the upside. And you get longer cycles to the downside. So it makes it really easy for us then to separate our trading into two camps, safer and riskier. So I'll go ahead and say this. If you're only getting long and you're not comfortable shorting, it's a good idea not to buy Apple for a long trade when the MACD is bearish because you're basically asking for trouble. All the stats are against you. And if you're interested in trading with an edge and having probability on your side, you probably just want to avoid buying Apple when the MACD is bearish because statistically, your probability of success is diminished. And I think it's really important to actually look at the data for that because that's how we get our edge, right? Is that clear for everybody? Everybody up to speed on that pretty good? All right, cool. So that's how the MACD works. That's how payday cycles work. By themselves, those two things working together is an incredibly powerful strategy, right? So these first two steps alone, payday cycles and the MACD for Apple. And remember, this is independent for Apple. I'm an Apple specialist. I love trading Apple. We can individually test separate stocks, but this is really good for Apple. Okay. So these two steps alone are going to help you make more money. Just like a student of mine, I want to highlight this for a moment because I think it's kind of important to see case studies of how well this has worked. So Micah was a break-even trader from Redondo Beach. He wanted more consistency in his trading, and his account was basically flat for many years in a row. He'd make money and then he'd lose it. In fact, he sent me the screenshot, right? And his screenshot is basically showing that in about a year, he was basically actually down a little bit. So he'd make 20 grand, he'd lose 30 grand, he'd make 15 grand, he'd lose 5 grand, he'd make 20 grand, he'd lose 30 grand. And these are pretty big swings. I mean, you know, they're pretty big swings in his account. This moment right here that we have highlighted with the red arrow was the day he joined our community, okay? So he made over $120,000 and he had about 100 grand to get started, okay? So it wasn't like he turned $10,000 into 120 grand. And in 2 weeks, he made 120 grand trading Apple and Alibaba payday cycles. Now he trades Apple and the FANG stocks, you know, Apple, Tesla, Netflix, Amazon, and he uses payday cycles and the MACD as confirmation. I got this note from him a little while ago. He says, Mike, I'm in Apple and Netflix and Tesla, all opened right before the MACD crossed the bulls, and I'm using payday cycles and the MACD, and I'm doing awesome, obviously. I love getting notes like this from people as a follow-up, okay? So I didn't get a chance in the beginning to kind of introduce myself and what we're up to, so I want to do that really quickly. Again, my name is Michael Lamar, CEO of Wall Street IO Community, the platform we were just backtesting on. I'm an expert stock and options trader, husband and father. I've got twins. They're about 22 months old, a boy and a girl. One of them is named Kelvin, and it looks like we've got a Kelvin here in the group. And my big thing is that I help traders get through the profitability curve by using strategies that have been backtested and validated. So we're using data to create that edge. And I get the question a lot, like, what does a profitability curve breakthrough look like? And we're going to show you that in a second, okay? So this is me hanging out at the Tasty Trade studios. You guys have probably all heard of Tasty Trade. Tom Sosnoff, co-founder of Thinkorswim, Tony, Jake Pelly, who's our income trader in Wall Street AO, and Liz and Jenny. This is me speaking at an option trader group in Phoenix, kind of helping them out. And when people ask me what I do, I tell them I help traders break through the profitability curve by using strategies that we've validated. And here's again exactly what that looks like. So when you look at a profitability curve that's flat, is basically what this is, and a breakthrough in profitability looks like this, okay? So I've coached students who are down over 300 grand, and in 18 months they made it all back plus about $500,000 in profits. I checked in with this guy a short while ago, and he was up about $2 million, which was pretty cool, especially considering he was completely depressed, resigned, like everything bad during the state, right? So what we're going to do next is we're going to jump into step 3, which is how to look into the future with seasonality, and we're going to be able to stay way ahead of the market by doing this. How many people here have ever used a seasonality tool? Go ahead and let me know in the chat room if you have. So I really like seasonality, and so what I did is I had our engineering team build us a really great seasonality tool. So I'm on the Wall Street IO platform right now again, and I'm just going to click on seasonality. And I used to do these by hand until my engineering team were able to build me a tool for it. But essentially, here's your month-over-month seasonality for Apple over the last 10 years. So let me know, what are the big months that kind of stick out for you right now? Right. What sticks out for me is December that we're in now is traditionally bearish for Apple, which may be counterintuitive for a lot of people because they think, oh, we've got Christmas coming up. Apple's going to rip. It's going to sell so many devices. But in reality, December is actually more often than not a down month for the stock. And we could also change this, like instead of looking at 10 years, we could look at 5 if we want, or any combination there. Okay. Again, over the last 5 years, December is usually pretty bad. So is June and so is September. However, July, August, October, November are usually really, really good for Apple. So we could use this to stay ahead of the game because we have the seasonality chart all year. And so in May, guess what we're doing in May? At the end of the May, guess what we're doing? Well, we're preparing for a potential bearish June. But when it confirms with what all the other indicators I'm looking at, like the MACD and payday cycles are telling me, it's like a slam dunk, okay? So what I want to do for a moment is just kind of describe a little bit about how I use seasonality, okay? So let's make a note of this, a mental note real quick. June is really nasty. July and August are really good. September's bearish. October, November are good. December's bearish. So remember that for a moment there, okay? Because we're going to jump over here to the chart. I'll go ahead and clear this out for now. Bum, bum, bum. So what happened this year in June? Well, let me go ahead and highlight June trading in Apple, okay? And remember, we have the seasonality information all year long. So at the end of May, guess what we're preparing to do? Well, we're preparing for a bad bearish June. Now, like I mentioned, we're not going to use that in a vacuum, but check this out. I'm going to load up the MACD, which we have the data around, and we know that when the MACD is bearish, it's more likely to go down, and the cycles to the upside are going to be shorter. So Apple kind of gave us a layup here because a week or so before June even happened, the MACD crossed to the bulls. Okay, so again, what do we know about Apple's behavior when the MACD is bearish, like it was here heading into June? Well, we know that it's more likely to go sideways to down, and if it does go up, it's going to be a short cycle, and it's going to be riskier, more likely to be a false start, which is basically what we got during this phase. Okay, so we had a big sell-off in June. Now, this big sell-off happened during the Worldwide Developers Conference, which when we jump over here to the seasonality chart, if we change from monthly to weekly, we could actually look at June week over week, and we could say, okay, well, what do we expect here in June? Well, the first and second week are pretty bearish. The second week is when a lot of the selling happens in June. What happens the second week of June? The Worldwide Developers Conference. It's a sell the news event, and the data shows it, right? And this nasty sell-off that happened during that week, okay? So as we're heading into June, which we knew was going to be a bearish month from a seasonality perspective, we didn't know, but we had the data that said it was. The MACD was bearish heading into it, which gave us the layup, right? And then what happens is, at the end of June, after we've had a sell-off, we have a little bit of a basing, right? A little bit of support. And then we know that July is really good because seasonality says July and August is usually pretty good. And again, the stock gave us a layup by having the MACD cross back to the bulls in the beginning of July. And here's what Apple did in July and August, okay? Made a pretty tremendous move here, right? So we knew that July and August traditionally are pretty good months of the year. And so at the end of June and as we head into July, we're building big positions in Apple down in here because all the stars were aligned. We're starting a bullish payday cycle, which you can see here with this doji, which is one of my favorite setups, by the way, which I cover in my payday cycle masterclass. And if I have time, I'll kind of cover that. But essentially, dojis are really, really good because they provide really low risk entries. You could essentially, when all the stars are aligned like this, put your buy right up at the top and your stop right at the bottom. It's pretty easy, right? So we're preparing for a really big July. We're basically loading up on the stock in the first week of July because all the stars were aligned. MACD crossed to the bulls, which then told us that the bullish payday cycles are going to be nice and long, which makes it safer to be in it. We had a beautiful bullish payday cycle. All of those metrics that I gave you, the 3 metrics, were true for this time. And we knew from a seasonality perspective, right, again, that July was really good. In fact, July is one of the most bullish months of the year. So we were like, great, this is amazing. August is good, not as good as July, but it's still pretty good. And then September is bad, right? So let's go ahead and fast forward to September. What happened in Apple stock in September this year? Okay, let's go ahead and see. Well, the stock had a pretty big sell-off, right? Sold off from about 165 all the way down to 150, right? Now, again, I don't like to use seasonality in a vacuum, so I'm not going to short just purely based on seasonality. However, check out what the MACD did. Again, it gave us a layup. The MACD crossed right here to the downside, and in fact, it gave us a bearish divergence, which happens when the stock makes a new higher high, bump and a bump, and the MACD makes a lower high. That's a bearish signal. So it kind of gave us a layup. Right when September was starting, the MACD went bearish, which tells us that these bullish payday cycles are more likely to be false starts. And if you're going to do any trading, either stay in cash or short it. So what I did is we were trading this down, and I had another secondary trade, basically shorting 200 shares, 157.98, I think is what I had by order, and caught a really great cycle to the downside. And I get a question a lot, like, should we be trading stock or should we be trading options? How are we going to trade? So I mentioned this earlier, but I was a derivative specialist in Apple for a long time. I love trading spreads and options on Apple. And the way I determine how I'm going to structure my trading is in most cases a picture of my life. Like, I look at my calendar over the next 2 to 3 weeks, say how busy am I, and if I have a really jam-packed schedule, I have no problem dumping a ton of cash into stock because there's no Greeks. It's only got delta, right? It's incredibly easy to manage. It doesn't require a lot of mental bandwidth to manage a stock trade. But if I have a really clear schedule, I have no problem doing option trading, okay? So guess what we were doing as September ended and as we're coming into October? Well, we knew October was a pretty good month, right? So we had another really great setup here in October, right? Because what happened is, guess what? The MACD went back bullish in October, right, in the first week. And then we had a beautiful bullish payday cycle start and brought us all the way up here, right? So I had put about, this was a really busy time in my life. I had put about $30-something thousand into Apple stock at this stage, wrote it up really nicely. And then knowing that September is traditionally bad for the stock, right? And so is December, we're starting to kind of clear things out, right? So as we're heading into December, which again statistically is a bearish month for the stock, we also had a MACD that crossed, and it still is crossed. So what does that tell us about these bullish payday cycles in this phase? They're more likely to be pump fakes, last about 3 to 4 days, sometimes even shorter. So this here was a pump fake, but the MACD was bearish, so we would have never taken the trade to begin with. And if you did take it, then you're basically just asking for more risk, right? So now we're in this phase of December where the MACD is bearish. We're in a bearish seasonal month of the year. The stock is moving down. I'm really not surprised at all. If you're surprised by the move down right now in Apple, then you're just not looking at the correct data, because all the data told us like months ago that this was going to be so, especially when the MACD crossed. It kind of gave us a layup. Okay, is that pretty clear for everybody? I hope that kind of helps everybody understand the context at which I look at this stock from, right, using that 3-point checklist, which is payday cycles, the MACD, and seasonality, all of which have been validated. So it's not like I'm just guessing that this stuff works. It's like the data proves it, right? I'm going to take a moment and kind of answer questions. Okay. Bum, ba, bum. Graham asks, whose charts are these? These are Wall Street AO charts. So these are my charts. I have an engineering team. We built these charts so that we can backtest and validate trades as a community. So these are Wall Street AO charts that I built, okay? All right, let's see. Everybody's up to speed? Yep. Everybody's good. All right, cool. Mark said, pretty interesting. Yeah, I think so. I mean, it's working, right? It's working pretty well. So you've basically just learned our simple 3-point checklist for making highly optimized trades. Now, in the beginning of today's webinar, we kind of highlighted the word optimized because it's really important for us to look at optimized trades, okay? So I want to show you one more thing really quickly, and that has to do with optimizing an indicator. So when we're looking at an indicator that's backtestable in our system, which is the ADX, chicken money flow, MA crossover, MACD, payday cycle, stochastics, we could, if we wanted to, let's just go back to candle for a moment. We could, if we wanted to, change the settings of the MACD or any indicator here. Default is 12.26.9, but I want to highlight something here for you. What happens when I change that to 15? Did you see these results update? I'm going to change it back to 12. Check that out. So as soon as I change this setting, it instantly recalculates the backtesting results for me. Okay, so if I want to tweak this a little bit, I can. And I want to highlight this for a second because it's really, really fast. Another thing that it does is if I turn this toggle on, it shades for me exactly when I would have gotten in and out of every trade. So if I want to backtest something with a visual trade log, I could actually just click that toggle and it shades for me every single time I would have used this strategy. And I could backtest it the same way with a stochastics or moving average crossover or anything like that. Okay. Now, again, when I open Smart Studies and I change this from a 15 back to a 12, it repaints the shading for me and recalculates the results for me. And I asked this question earlier, how many people have ever backtested anything? Some people said, yeah, it takes forever by hand, but there's a few other backtesting programs out there. And when you want to backtest something, you have to put in the query, show me how well I would have done over the last 3 years with the MACD, and it ships off to a server, and you're likely to get the results back. It takes usually about an hour up to 24 hours to get your results back. We had a really big breakthrough when we built Smart Studies that we're able to give you instant backtesting. We're the only platform in the world that can give you instant backtesting and validation right on the charts. So again, when I change this from a 12 to a 15 or whatever, it immediately recalculates that for you. And I want to highlight that again because it's really fast. And in the digital world we live in right now, nobody wants to wait around for results. They want to see it instantly. Okay. It also begs a question. If you can adjust these settings and potentially tweak these results quite a lot, what is the best setting to use? So go ahead and write this down, 14, 31, 10. These settings are what I like to use for Apple's MACD. They're an optimized set of indicators for the MACD, 14, 31, 10. Here's why I like to use them, okay? Check this out. Remember here the average win and average loss that we're using? Right now with the optimized setting, the average win is 970 and the average loss is only 217. That's the optimized one. I'm going to flip back to the default one, okay? 1226, 9. Now the average win is $8 and the average loss is 272. So by optimizing this, 14, 31, 10, I've increased my average win and I've decreased my average loss and I've improved my batting average a lot. Okay. Now, because there's 28,000 possible combinations of the MACD, there's no way I was able to do this by hand. So what we built, our engineering team built for us, is a super processor. We named it Prometheus. Prometheus was the Greek god who stole fire from the Greek gods and Mount Olympus and brought it to the mortals. We thought it was a good name for our super processor. So if I sync Prometheus and start it, you can see there's 28,158 possible combinations for the MACD. I'm going to go ahead and start that right now for you. And you can see within a few seconds, we've already tested 1,000 out of the 28,000, now 2,000, now 3,000, now 4,000. And this is testing every single MACD combination and is going to give us the #1 MACD settings to use. Now, lucky for you, I've already run this test, so I already know it's 143110. Okay. So as an admin of the website, I have access to Prometheus. We don't give our members access to run our processor. But what we do is we've already run it against about 300 stocks and tons of indicators, and we give our community access to the results of it. So if you want to know what the best ADX settings are for Apple, you can see it under the leading strategy board. So we created leading strategies to display the results of our tests. And again, these are to create optimized settings. Okay, so you can backtest it, but you could also optimize it. I hope that's kind of clear. Okay. All right. So again, you just learned our simple 3-point checklist for making highly optimized swing trades. Okay. And here they are again. Payday cycles, the MACD, and seasonality. And I hope you have a clear distinction now of what an optimized trade plan looks like versus a trade plan that is kind of just shooting from the hip or guessing. Now we want to actually use the data to create a statistical and probable edge in our trading. Okay. I wanted to highlight Lisa D really quickly. She was one of my students. She came to Wall Street AO struggling because she was trying to find good entries and exits. She joined Wall Street AO in 2015 with zero knowledge of technical analysis, and her goal was to make money from home, working part-time. By creating a routine, she had a stunning 86% success rate in 2016, and that year she completed a lot of trades, 197 trades, right? And she basically turned her $100,000 into $320,000. She says, before entering any trade, I always refer to my charts, seasonality tool, and smart studies inside Wall Street AO, so that she's not guessing, right? She's using the data to give herself an edge. And so what else can you do? You can, again, answer some of these questions like, hey, what's the #1 moving average cross for Apple, or the #1 ADX or MACD settings or stochastic settings for Apple, or any of the other stocks that we've scanned, which is about 300 stocks so far. Okay, and we also set up our platform so that if you find a strategy that you like, you can favorite it, and then we tell you when that strategy starts and stops, making for the ultimate swing trade notification system. So it's like, hey, Micah, remember that MACD optimized strategy you liked? It's starting today, or it's ending today, or it's in progress by 4 days, right? So I think it's really a good idea to start with 1 to 3 stocks, right? And when I was first starting as a professional derivatives trader about a decade ago, you know, I'd be fine having 20 to 30 open positions going, butterflies, condors, credit spreads, all sorts of positive theta trades. And what I found is when the market started to move funny, it was really difficult for me to be able to manage and delta hedge 20 to 30 open positions. And after looking back at my P&L, I realized that a lot of my profits came from just a couple tickers, specifically Apple. So that's when I decided to be a specialist. And I think it's a really good idea to do that because there's so many shiny objects out there in the market. But if you can stick with just a few of them that you know really well, you're probably going to be more successful because you get to know the natural rhythms of the stock and how it moves. I think it's better to be a specialist than a generalist, okay? So something amazing happens when you focus on just a few stocks versus chasing every shiny object. Like, for example, I know how Apple options trade in the morning compared to the afternoon compared to the middle of the day. I know how they trade on Friday differently than Monday. I know how they trade closer to earnings. I know how the stock behaves on all different parts and pieces of its cycles. And I do this because I'm looking at it every day and I'm not distracting myself with a million other stocks out there, okay? So I think it's easier to stay disciplined and you're less likely to get caught off guard by being a specialist in a few stocks, okay? So what stocks work great with payday cycles? Well, I've got 3 of them and I'm calling it my top 3. So what's the top 3? The top 3 are 3 stocks that we've run our super processor against, and we found 3 that trade really, really great with payday cycles, okay? And we're calling, again, the top 3. So just like Apple's strategy I showed you today, the top 3, you get daily email notifications telling you when each strategy is starting and stopping. Right now, most of them are bearish, so there's you know, unless you're shorting, there's no opportunity now until it flips back around, which could take a few more days, okay? And again, the strategy email that tells you when it's starting and stopping is sent out an hour before the market closes. All of our back testing is routed to the end of the day. Okay, so we want to make sure that you can have about an hour to make a decision. And then I make all my trades usually at the end of the day as well. Okay, you also get a portfolio dashboard on our website that you can log into to see updates on the top 3 throughout the day, so you don't have to wait for the email if you don't want to. We try to keep it as simple as possible. Okay. So as a special bonus for everybody who signs up today, I'm going to give away my top 3 to everybody who grabs a Wall Street AO membership. Okay, plus you're going to get all the other benefits of a Wall Street AO membership, which include a portfolio. So you're not limited to just 3 stocks. You have unlimited back testing. And if you want notifications, starting and stopping notifications for strategies, you can do a lot more than 3. So you're not limited to the 3. This is just a Kickstarter, okay? You have unlimited back testing with smart studies for all 8,000 stocks and ETFs in our system for the MACD, stochastics, ADX, chicken money flow, and any moving average crossover, right? You have access to leading strategies, which is the display board where we highlight our Prometheus tests for #1 optimized indicators. And you also get access to our university, which is our on-demand stock and option trading. Okay, I wanted to highlight 2 courses in our university that you're going to get. Our Payday Cycle Masterclass, which are 6 videos that cover payday cycles, how they work, how to use them, how they work with options, and then our options course. If you're interested in trading options, this is a really great course. We got this note from Matt Webb, one of our members. He says, I want to thank you so much for providing an amazing platform for us. Since joining Wall Street AO, I've tripled my options account. I've been constantly learning so much again. Thank you. Okay, so if you want to learn about advanced delta hedging and spreads and everything like that, this is a really great course. It also starts as a beginner, so if you don't know anything about options, it'll take you all the way through the process, okay? So we started out with a lot of retail traders. However, since we've been building some really great tools, we're also starting to get the attention of some really big traders. So here's what the pros are saying about us. What you and your team have built is pretty incredible. We begin using it as a company, and since our membership, we haven't been able to put it down. These folks have $200 million in managed assets, and they love what we're doing with Wall Street AO, okay? So what I just showed you is our Plus membership. It's $197 a month. And again, that's the university, unlimited backtesting, leading strategies. I didn't even get time to cover this, but our whole community, we've got 4 coaches, including myself, 1 day trader, 1 income trader, 1 Elliott trader, and then myself as a swing trader. So you get access to all those coaches. It's $197 a month, which I think is a pretty good deal. Okay. Now, I wanted to give you a big thank you for coming today. And so I'm going to knock off $100 off your membership. Okay. Now, I can't do that forever. So the coupon here is going to end in a few days to get the $100 off. But the good news for you is that you get grandfathered in. The discount stays with you as long as you're a member. So we're not going to raise the price for you in the future. It's basically locked in at $97. Okay. So what I'm going to do right now for you is I'm going to go ahead and post up a link that you can use to sign up. Okay. To everybody. And I'm going to post it in the chat and the thing. Thanks, Mark. Appreciate it. Okay. Now, I've got a really cool fast action bonus here for everybody because I love rewarding people who take action. For the first 10 people who sign up right now, you're going to get a free one-on-one strategy session with me. Okay. And I posted the link up there, so go grab it now. Okay. Here's what we're going to cover on our call when we talk one-on-one. We're going to find out exactly where you're stuck in your trading. We're going to develop an action plan and a roadmap to profitability. You're going to get a tailored walk through our platform designed to make sure that you get the absolute most from our tools and our resources. Okay, and we're going to use the same roadmap that I used to help this student turn a massive loss into a pretty big gain. Okay, so remember, the membership comes with unlimited backtesting to all 8,000 stocks and ETFs. Here's a little bit of the benefits. You're going to get the strategy call with me, but only for the first 10 people. I'm probably guessing that's going to fill up really fast. Unlimited backtesting. Leading strategies, Prometheus, our stock and options university, top 3 with daily updates and training. You're going to get a Plus membership for a pretty big discount here. And the $100 coupon expires on Sunday. You're also going to get seasonality and our community and everything else. Okay. So how does the strategy session work and why is it so effective? Why are our strategy call members doing so well? Well, here's what I do. I developed this really unique way of coaching. And so if you just signed up, what I want you to do is go ahead and click this question mark icon and start a conversation with our team and say, hey, send me the one-on-one link. And we're going to send you a link to a form, okay? And the form is going to look like this, okay? It's a trader discovery worksheet. And you're going to fill it out for me before our call. We're going to talk about the capital to invest, time to trade, experience, complexity level, risk tolerance, ability to follow rules, gauge profit targets, manage trades, how well you are in your trading platform, open trades, income versus long-term growth, profitability versus loss. You're going to fill this out twice, one for where you are now and again for where your goal is. And I have a digital copy of this now. So when you sign up right now, click the question mark icon, start a new conversation, say, send me the one-on-one. What we're going to do is we're going to send you a link to a digital form that you fill out, and then that redirects you to my calendar to schedule the call with me. Okay. The reason this is so effective is because we identify the exact pinpoint places where you need the biggest help in your trading. And we do that by looking at the gap. So there's going to be a gap in certain areas like gauging profit targets. If you're here now and you want to be over here, then there's a gap there. So we know to focus on that. And what we'll do in our call is I'll give you action-oriented goals that are measurable that you can do as exercises to improve this area of your trading. Right. So rather than just creating the goal like, hey, I want to make $20,000 this month. Well, that's a great goal. It's not measurable. It's not actionable. Right. So I'll give you action-oriented exercises for each area that you have a gap so that you can do those and actually increase and fill the gap in your trading. So it's a really unique way of coaching that I developed that's having incredible results so that we're not just broad stroke talking about trading on our call, like we're pinpointing the areas of your trading that where you need the most help. And we found that it's incredibly highly effective for our community members to kind of go through that process. So again, if you just signed up, click that question mark icon say, send me the one-on-one link, and our team will send you over that link, okay? So you're also going to get access to our community, as I mentioned before, right? Our community is a bunch of really great traders. We have an Elliotician, we have an income trader, we have a day trader. Day trader is actually live right now. It's kind of good timing. But every day, Monday through Friday, for the first 90 minutes of the market, professional day trader that I hired, a good friend of mine, broadcasts his screen, calls his trades live as a day trader. Every Monday and Wednesday, I host a swing trading webinar for an hour. And you get there within our platform just by clicking on the live tab, and then you can interact with the community right here in our live trade room. So you can see there's a lot of members in there right now. Okay, and then we have an income trading broadcast on Thursday by my friend who's a professional income trader, right? He's been selling options for a living for the last 7 or 8 years. Really, really great trader. So again, you get lots of coaches when you sign up, right? So let's go ahead and see where we are right now. I think we pretty much covered everything. Oh, there's some frequently asked questions here, and then we'll do a quick little Q&A. So get this question a lot, how much is chart data, right? Because we do give you our charts when you sign up. How much is the data? The good news for you is I pay that data for you. It's a big, hefty fee, but I pay it for you because I don't want you to have to pay anything extra. And our platform is web-based, so you can access it anywhere, whether it's a PC or a Mac. You don't have to download anything. It's live data within a couple minutes. Sometimes it's a minute or two delayed, but for the most part, it's pretty live. Are there any contracts in our membership? There's no contracts. You can cancel anytime. And what kind of support do I get? So this is a good question. There's a few things that you get as support. The first one is you get in-app chat support. So if you click on this question mark icon, it pops up in a chat room where you have access to chat with our team one-on-one, right? This is different from our trader chat room, right? So here's the trader room, and here's the chat support, okay? You also get a whole getting started quick guide, which will help you get up to speed. It's 6 short videos. It'll take you like 20 to 30 minutes to get up to speed. And then as a reminder, every Monday and every Wednesday, I host a 1-hour webinar with our community to talk about the markets, leading strategies, payday cycles, everything like that. We usually have, 50 to 100 people there. It's a really, really good group. And so you get that as well. And they're all recorded and archived in our university. Okay, so here's again the benefits. For everybody who just signed up, a couple things I'd suggest, right? Click the thing, of course. Tell us you want your one-on-one link. Jump over to the university. Check out the Payday Cycle Masterclass. That's a good one. And the other one is the Build a Better Strategy class, all about leading strategies. Okay, those are 2 really, really great places to get started. Okay, so what I'm going to do right now, because I've got a few minutes left, we're going to do a Q&A, and then I'm going to tell people exactly how many of these 10 spots we have left, because I want to make sure they don't fill up too fast here for everybody, okay? So while I'm refreshing this, I'm going to answer some questions. Okay. Mark says, if we get the $97 membership, can we suspend it for a month or two and come back? That's a really good question. I'm sure we'd probably do that for you. But go ahead and sign up. And if you ever have to pause it for a month like you're going on vacation, just email us, okay? Mark says, it seems like you'd be really good for beginner traders. Yeah, we kind of have the whole path kind of covered. If you're a beginner trader, perfect. And even if you're an advanced trader, because we do have some pretty advanced traders in the group, you'll still like us, okay? Let's see. Sherry asks about credit spreads. How much of an account do you need? Great question. So there's a day trading rule. Like if you want to hold spreads or anything overnight, you have to have at least 25,000 in your account. Mark says, yeah, it's always great to be able to backtest and validate things. Graham says, Micah, does this deal include the chart package? Absolutely does. Everything I showed you today, it includes, except for the Prometheus pop-up here. This is run by admins of the website, right? And we do the scans for you. The members, unfortunately, right now don't have access to Prometheus. You have access to the results, though, which is why you'd ever want Prometheus. You don't want Prometheus, you want the results of it. So that's what we give you in leading strategies, okay? Good question so far. Kelvin says, wow, this is awesome. Graham says, do we do this for any indices? So we have ETFs like SPY, Qs, and everything like that. Kelvin says, good stuff. Do you teach us on the one-on-one? I do a little bit of teaching, but a lot of it is about you and your trading and how to help you the most, and I'll point you in the right direction. Actually, pretty interesting. Yeah, I still use candlestick patterns. Good question. Pam says yes. Awesome. Can you scan for options? We don't have options data yet, but good question. Right? Yeah. You still have to use your own broker, correct? So we're not a trading platform. You don't trade through us, right? You don't trade through us. So I just got about a minute left, and I can see right now that half the spots are filled up already, which is great. So thank you, everybody, for signing up so far. Again, I kind of walked you through what to do with that. We got a few spots left, so if you're interested in working with me one-on-one and kind of joining what we're doing as far as being able to backtest and validate your ideas on the fly, we're the only platform in the world where you can do that, and I really recommend kind of jumping into our community and joining us. We only got a couple spots left, so we are about ready to end the session today, and I'm guessing Dan is going to kind of jump on here in a minute, and we'll just kind of keep jamming until then. No, most of my Apple trades are not necessarily credit spreads. While credit spreads are good, there's a lot better ways that we can leverage ourselves with options than credit spreads. Credit spreads are like the medium strategy for option traders, I think. Good question so far, everybody. Hey, Dan.
Micah, just a reminder, you have until 10:30.
Oh, I do. Well, that's good news. Sounds like we got another 10 or 15 minutes left, everybody, so this is really cool. So we're going to keep taking questions here. I want to highlight one of the important things here. How many people here have heard of the T-line, which is the 8 exponential moving average? Okay, 8 exponential moving average. How many people here have heard on the internet, oh my gosh, the T-line is the most incredible indicator to use? How many people have heard that? So what we're going to do right now is we're going to backtest this, okay? So all I have to do is click on the MA button, which is a moving average, and I can say, show me how well I would have done in the last 3 years for Apple if I only would have bought the stock above the 8, not simple, not double, but exponential moving average over the last 3 years, okay? Here's the results. I would have made $27 only, not very much money. I would have had 25 wins and 51 losses. The batting average is absolutely terrible for Apple on the T-line, okay? Average win 450, average loss 167. Pretty good ratio here, but the batting average is terrible. That's why we didn't make very much money. So you would have made a little bit of money, but it wouldn't have been worth it. It's not nearly as profitable as a payday cycle strategy or the MACD. Okay. Now check this out. A lot of people out there, unfortunately, are also using the T-line, which is the 8 exponential moving average, to trade the SPY. Check this out. Here's the importance of being able to backtest and validate these things that you hear on the internet on the fly on our platform. If you would have been one of the unfortunate people using the T-line to trade the SPY, you would have lost money in the last 3 years, despite the fact that the market was so bullish. You would have lost $6. Talk about a frustrating setup. Now, unfortunately, there's a lot of people out there that are using things they heard on the web that don't work. And so what we wanted to do as a community is just to build a simple way to have some transparency around all the stuff that we hear. Because the T-line is really popular, and a lot of people are out there toting like, hey, use this T-line. And we've just shown like, yeah, it could work for some stocks. It worked a little bit for Apple. But if you would have used this by itself without any other thing with the SPY, you actually would have lost money. And that's really important to know because like you would never want to use it if you knew that, right? Which is kind of what we're trying to hope to do. So half of backtesting is to find really, really great strategies, right? The other half is to debunk things that we hear or we think that don't work. It's equally as important to know if a strategy doesn't work as to know if it does work. Okay, so we got a couple minutes left. What is a moving average crossover that you've heard about on the web? Type it into the chat room right now. We'll backtest it on the fly for us, okay? Go ahead and type that in right now. Graham, if you sign up by the end of the week, you'll get the deal, buddy. Davis, Pam just signed up. Thank you, Pam. That's awesome. So Pam and Tim and everybody else who just signed up, what you want to do is click this question mark icon and right here start a new conversation and say, send me the one-on-one. Nick here or I myself will get back to you with a link, and that link will be to the trader discovery sheet, and then it'll redirect you to my calendar to schedule a call with me. Okay, so that's what you do. Pam, Tim, we've got Rick just signed up. Thank you, Rick. We got Tim. Everybody who just signed up, that's what you do. Second thing is to jump to the university and check out the Payday Cycle Masterclass and the Build a Better Strategy class. Okay, let's see. Let's see. Bum, bum, bum. Peter asks about backtesting the PMO indicator. We don't necessarily backtest the PMO indicator, but what's a moving average crossover that we've heard about on the internet? A lot of people have said this. So we're going to get rid of just the regular moving average test, and we're going to click MA crossover. And here's what people have been saying. They're using the 8 and the 21. And this is just simple for now. But how well would this have worked for Apple in the last 3 years? You only would have made $13. Again, it's not really a strategy that's like worth it, okay? Across the bottom, you can see you would have lost a ton of money in 2015 and 2011. It's a very inconsistent strategy. So when I'm looking at a good strategy, it's for bullish, it's green every year, at least 8 out of 10 years. 10 out of 10 is better. But when you see flip-flopping like this, man, I just wouldn't even touch this thing. So the 8 simple above the 21 as a moving average crossover is not necessarily like the most effective thing to use for long-term success because it doesn't really make you that much money. Okay, this is for the SPY. Let's take a look at Apple. Okay, would have worked a little bit better for Apple. 8 wins, 9 losses, pretty good risk reward here. Still would have lost money in 2015, but a more effective strategy for Apple. How about NVIDIA? This is a really popular one. Has the 8 crossing the 21 worked for NVIDIA? Yeah, it's worked pretty good. But then remember, NVIDIA has been incredibly bullish, right? This would have saved you this big headache from on the downsell hill here. Now let's do something real quickly. Let's change this from an 8 simple above 21 simple to an 8 exponential above the 21 exponential and see how that potentially shifted the results. A little bit more profitability in NVIDIA. Let's take a look at Apple. Still not incredibly effective with Apple, right? Let's take a look at SPY. Terrible batting average with SPY, but still profitable. But in 3 years, if I was only going to make $10, I mean, that's not worth my time or money. Okay, so here's the point I'm trying to make is there's a lot of stuff we hear about, and there's a lot of ideas that we have as traders. It's important to be able to backtest them and validate them on individual stocks because every stock trades differently. From all the tests that we've run, and we've tested over 1 billion strategies now with our processor, we've basically come to the conclusion that every stock is different. Every stock trades differently, every stock cycles differently, and you need a strategy for each stock. Okay, that's why our top 3 has a slightly different strategy for each one. Okay, let's see. Peter says, how many strategies can you test? You have unlimited backtesting. We have 8,000 stocks and ETFs in our system, and you have unlimited backtesting with Smart Studies. You can backtest it on the fly, 24 hours a day, 7 days a week, as much as you want. There's no limit to the backtesting. Good question. Now, whenever you find something that you like, right, so let's say, for example, I liked this strategy, which I don't, but if I did, I can click this little thing, this little star. I can name it, so I could say, great MA cross, which it's really not, but this is for an example. I click enter. And now when I come over here to the left side and I look under my favorites, I have this strategy under here, my favorites. I've got some good ones for here. But essentially, great MA cross is now stored for me in my favorites. I don't like the strategy, so I'm going to unfavorite it, but that was just for an example. So whenever you're testing and you find something that you like, we've created a mechanism for you to favorite it so you can save it and come back to it later. And they're all filed under the top stock for you. And then we've created a portfolio that when you add a ticker to it and you have a favorited strategy, will tell you when that strategy starts and when it stops. That's, again, the notification system. It's pretty sweet. Mark says, I really like the speed of it. Yeah, we've done a lot of work to get this backtesting machine so fast. And again, it's the fastest one that's basically available for a retail trader. All the other backtesting programs out there, you're going to have to ship it off to a server and wait an hour to a day to get it back. We're the only ones in the world that can do it on the fly for you because we had a big breakthrough when we were building it. Okay. Let's see. Bum. Fred asks about stochastics. Sure, let's take a look. So here's stochastics. I'm going to go ahead and click it. Here's just your default settings for stochastics. In the last 3 years, you would have made an okay amount of money in Apple. The batting average actually wasn't that great. 38 wins, 58 losses, but you still would have been barely profitable. The batting average is, the stochastics is usually good for a shorter term trade. But we can optimize this. Like right now, I can jump into leading strategies, and I can open up this panel here, which these are, by the way, all the indicator and combination indicators that we've tested for Apple. And I'm going to go ahead and click on stochastics. And so what I'm looking at now, when I close this, is I'm looking at the test results for stochastics for Apple, and we can filter them by the ones with the best batting average or the best ROC score, return of capital, or the best, what I like is YOYC, the year-over-year consistency. Check this out. This is way more profitable. So let's just compare, actually, this is great. Let's compare this for a moment. Would you rather use the default stochastics for Apple and only made $21, $22 in 3 years with a really bad batting average? Or would you rather made $80 in the last 3 years, batting average actually above 50%, and still a really good risk-reward ratio right there? This is your number one stochastic setting for Apple, right? 4 times better than the default one. 4 times. Pretty incredible. If I wanted to know what the number one moving average crossover for Apple, I just open this compare slider, unclick stochastics, click MA crossover. I'm going to close this now. Now what I'm doing is I'm looking at the number one moving average crossovers for Apple. This one floats right to the top. 7 wins, 1 loss. I love this. Check this out. I'm going to zoom in on this because it's important. Check this out. Every year has been profitable for this MA crossover. Profitable for 10 years in a row. 2013 was flat, but it didn't lose money. But it's been profitable for 10 years in a row. Is that a good strategy? Yeah, that's a great strategy. Average wins $11. Average losses only 3.5. Bad average 7 wins, 1 loss in 3 years. Like, this is a good strategy. Okay. So what can I do now that I found this strategy in leading strategies here? Well, this is great. I'm going to favorite it, and I'm going to say number one MA cross. And I can just click enter. And now, because Apple's also in my portfolio, this system is going to say, hey, Micah, the number one MA crossover is starting today. Or, hey, Micah, the number one MA crossover is ending today. And if it's in progress, like during the trade span, it'll tell you what day we're in. Why is that important again? Well, let's say you're in a strategy that lasts on average 10 days. And today's day 9. What do you probably should be preparing to do? Probably want to be taking profit soon. You're like almost through the average trade span. It also helps with options. If you know this MA crossover on average lasts about 40 days, that's almost 2 months. You know now how much time to buy on your options. You can also structure your trade based on this information. So it's incredibly helpful to have all this data to basically tell you exactly how well it would have worked, when it would have worked, and under what conditions it would have worked. And then you can turn this toggle on and go back on the visual trade log and see exactly when the strategy would have had you in and when it would have had you out. And for any good bullish strategy, you want to avoid strategies that get you in during these big downswings, right? Which this strategy has done. So here's a little bonus for you right now. The number one MA crossover for Apple, right, here is the 10 EMA above the 28 DEMA. Number one MA crossover for Apple. 10 EMA above 28 DEMA. And I've now favorited this strategy, and so my system is going to tell me when it starts. So even if I forget, that's the cool part. Like 2 weeks from now, oh, I forgot about this strategy. Well, guess what? It doesn't matter because I'll get an alert that it's starting. It's pretty cool. And that can be really robust. Like you could say, you know, it could be as simple as click on a MA, which is moving average. Click below 200. I can now favorite this strategy, right? And basically what this is saying is alert me every time Apple closes below the 200-day moving average. So it could be as simple as that. It's a really robust system with a ton of flexibility. Does that answer your question? By the way, everybody, we got 1 spot left on the one-on-one calls. So I'm going to basically post up the link one more time for you. If you're interested in joining our community, working with me one-on-one, I highly suggest you jump on now. If you're on the fence, this is your opportunity because we got 1 spot left, right? And once it fills up, I can't do any more calls because my time is really sacred to me. I got a crazy schedule right now with twins, with running our company, with my own trading. I'm also building a house, so it's like a ton of stuff going on. So I can't do calls for everybody, so it's only for the first 10 people. And it looks like we got 1 spot left. Okay, let's see if there's any other questions. I think we're just about ready to go. Let's see. Craig asks about getting up to speed with our software. So what you're going to do, there's a couple things to get up to speed. If you hover over your profile right here and you click on the Help Center, and I got about 1 minute left here, in the Help Center, we have a whole knowledge base to get you up to speed. So if you click on Getting Started, we have a Getting Started quick guide that goes over all of our features, which is Smart Studies, our backtester, how to read the results box, how our super processor works, how leading strategies works, how to add stocks to your portfolio, and how to read a strategy notification. They're all only 3 to 5 minute videos, and there's only 6 of them. I guess 7 with this one. So it'll take you like 25 to 30 minutes. So there's lots of documentation on getting up to speed. And remember, every Monday and Wednesday, today actually, I host a webinar for an hour with all of our members. And so if you have questions, that's also a great time to ask me. I'll help you out live, okay? All of them are all of our back testing is done to the end of day, but our quotes are streaming throughout the day. Okay. Bum. All right. We had a few questions that came in, and I apologize in advance if I didn't get to all of them. What I'm going to do is, if you have questions, you could jump over and ask, okay? So I think that's just about a wrap. Thank you, everybody, so much for being here. Last question of the day, because I think we're time to wrap it up. What was the biggest highlight for you today? Go ahead and let me know. I like to track that to kind of make sure that my webinars are on point with everybody in our community. All right. Yeah, remember, seasonality does come with it. It comes with all stocks. So if you wanted to look at seasonality for any stock, you can. So a lot of people say, Peter says, awesome webinar. Thank you, Peter. A lot of people say the biggest highlight was being able to optimize an indicator. Other people say the idea of using probability stacking, which is payday cycles, MACD, and seasonality kind of like all together. Payday cycles was a big one. Marcelo says he's going to sign up. Thank you, buddy. So we have some cool members that have signed up today. Welcome to the community. Excited to kind of work with you. We have Amex, NASDAQ, and NYSE, so we don't have a lot of Canadian tickers, unfortunately. Sorry, Peter. And we don't have futures or forex yet, so we're still kind of working on expanding our data set. But good questions, everybody. I think that's pretty much a wrap for me. Thank you, everybody who just signed up. Who wants to take a look at the MA crossover setup again? Here it was. It was the 10 EMA above the 28 DEMA. So write that down for you. And this is just for Apple. Don't use this on other stocks unless you can backtest it, because it may not work on other stocks. It's optimized for Apple, okay? Thank you, Pam. Thank you so much. All right. Cool. Thank you, everybody. Again, if I missed your questions, I apologize. There's a lot of them that kind of came through, but I did my best to answer them. I hope you got a tremendous amount of value out of being here today. And if anything, I showed you how to stay out of trouble by separating your trading into 2 camps, riskier and safer. And as I noted, it's riskier to be along Apple during phases like now when the MACD is bearish and we're in a bearish payday cycle and a bearish seasonality. So you got to use that data to your advantage. It's out there, right? It's out there for you to use. Mark says, great presentation and product. Thank you, buddy. Andy says, thanks. Okay, cool. All right, everybody, that's a wrap. I got to go get my kids up and get them breakfast and everything, and then get back to my community. So thanks for being here.